All right. Good morning. Welcome to the Trade Setup right here on BQ Prime. I'm Neeraj Shah, and suffice to say, the mood isn't the most optimistic. Let's take stock of the global roundup. Now, of course, the US markets ended lower, so that's ended lower for the third consecutive week per se on a weekly basis. But I think one key reason why Europe and US have an issue, and Europe in particular has an issue, is that Russia has indefinitely suspended the Nord Stream pipeline. It's gas and not has pipeline to Europe, but Russia has indefinitely suspended the Nord Stream gas pipeline, and that puts into question mark how bad would Europe's energy crisis be as winter is now almost here. So clearly there are issues out there. Clearly there are conversations around how high inflation can be, not just in Germany, which gets impacted majorly by this Nord Stream pipeline, but even in UK and other places. So there is an issue that Europe has at hand for sure. It could spill over into risk off into other markets, as probably we'll see today and for the course of the next few days. By the way, China has extended lockdown in areas of Chengdu, which is an expanded mass testing. I think in some tweets it says it's seemingly that it's a complete lockdown in Chengdu, and that's a large region as well. So that zero COVID policy out there continues in a meaningful way. Um, and European futures are trading lower. US markets are shut today, but keep in mind that the world markets are under a bit of stress, and that might well continue. I still maintain that maybe the risk indicators aren't as negative as they were maybe a few days earlier. And well, if people had paid attention to those risk of indicators, then maybe shorts might have made money or longs wouldn't have lost money, because certainly longs have lost some money in the recent past. What's to be watched out for this week is also important, and we'll get to that in a moment. Uh, Okay, let's first talk about that. Then we'll talk about the other indicators, the U.S. markets, etc. So remember, the U.K. Prime Minister will be announced today. OPEC Plus meeting on supplies today. This week is full of central bank action. At least 9 central banks coming out with their policies. Once the most important ones, ECB and Canada, and those two policymakers may raise rates by 75 basis points. Australian and Chilean central banks may raise by 50 basis points on Tuesday. So Tuesday and Wednesday are the 2 days when in large central banking activity will happen. So pretty packed week, you would have to say, from central bank action perspective. Remember, US markets, as I said, were lower on Friday, about 1% off, and uh, all other indicators too are looking wobbly. Be it the US 10-year yield, be it the real yields in the US, be it CBOE VIX, be it India VIX, everything. The dollar index is at 110, so even that has inched up. By and large, things aren't looking the most positive for risk assets. So therefore, what's the trade setup? I mean, my larger point being that there's no major domestic event this week, and therefore global mood will dictate the index movement. Supports vary from 17,150 to 17,377 levels across strategy nodes. I mean, I've seen multiple people looking at multiple as they normally would, but the broad range where people are seeing supports is this. Maybe keep them in mind if you are trading the Nifty on a daily basis, but otherwise, really, per se, it doesn't have any uh, uh, relevance per se for an investor's perspective. But watch out for these numbers. Nifty Auto, fifth consecutive month of gains, and now the total gains, this is from the time that rally has started, is about 25 odd percent, which is pretty strong in this year. Remember, it's got 5 years of underperformance to cover up for, if indeed the numbers come out well. Thus far, the numbers don't seem to be too bad, but for maybe Tata Motors perspective, and I'll get to that as well. But yeah, 25% performance already. Could there be a bit of a pullback is the question. Maybe there could be. And of course, what will buck the trend today? Most likely sugar stocks, high probability. In fact, I've mentioned slight probability, but you never know. There might be a high probability that those might do so, because sugar prices look like they're on the mend, and we'll briefly talk about that as well. Before that, something that doesn't happen too unusually, and I saw an email in my inbox from Chris Wood, the greed and fear flash, as they called it, that recent market movements and the renewed lockdowns in China prompt greed and fear to make asset allocation changes in the Asia Pacific ex-Japan relative return portfolio. With the Indian overweight having almost become neutral, the allocation in India will be increased by 2 percentage points, with the money raised by shaving the weighting in China back to neutral. Well, in these times as well, people are gravitating towards the few markets which might do well. Remember, I was also reading a Nomura note which suggested that um, that this week or this month as well, the last 4 weeks have been weeks where, or this week too, has been one in which money has rotated out of equities in general. And in Asia, it's rotated out of countries like Taiwan, which may have issues because of geopolitics and the shortage of and the supply demand, semiconductor demand issues as well, not just supply, into markets like India, which is relatively more resilient. So in some sense, EM money has come into India, but globally, equities by and large have seen outflows. Remember, viewers, if you look at the FI positioning very clearly, the last few days, the stock futures exposure from the FI side has reduced quite considerably. And some credit should be paid there as well. Not too many stocks, unfortunately, to talk about today. I mean, sugar, like I said, could buck the trend because sugar is rallied on concerns that the India export limits will tighten supply. And therefore, watch out for all sugar names. Yeah, InCred came out with this note yesterday. They're saying that sugar prices are set to rise in the coming weeks. I think that it's already started because sugar production is set to decline in this season by at least 4.5 million metric tons for the world at large. Drought in Europe and USA, floods in China and Pakistan, and La Nina, which is developing and which might impact Brazil, are the main reasons for this decline. And therefore, their belief is that all companies in this sector will benefit from the same because sugar prices will essentially inch up and India might do well. So, well, watch out for the sugar stocks. At the I would just, if inflation ceases to be a concern in India, then it's fine. But if inflation remains a concern in India, then I wouldn't bet my last dollar on sugar prices being allowed to go up disproportionately. Some bit of caps could come in out there as well, informal or formal, as the case may be. But it's an outside event, it's a hypothesis. We should follow the news, and the news seems to be suggesting that sugar prices are on the way up. So maybe it's a sector that will buck the trend. Some of the stocks in news include an Electra Green Tech, when the company's got a letter of award for 100 electric buses, or Paytm, wherein ED is searched, Paytm and Razorpay in the China loan apps matter, or BEL, which has signed an MOU with Smiths Detection India to manufacture high energy scanning systems in India. The company is doing multiple different things, so watch out for these. Tata Motors August data for the for US looks weak, so watch out for that as well. Some companies moving into short-term ASM framework include a Nelco amongst others, which has been the one big mover. A lot of people have been trading in Reliance Power and others. Watch out for that too. And then Tejas Networks. And the companies which are moved out of short-term ASM framework include a Siemens, BCW, and Sangam India. There's a note on M&M Financial. The target and the overweight is not as important as the news out there. Apparently, disbursements and collection momentum for M&M Financial has remained strong in August. The collection efficiency was marginally lower, but the stage 2 loans declined while stage 3 loans remained stable. The key is disbursements and collections. Momentum, which was there in the last quarter, has remained strong both in July and August, which is actually a good sign for M&M Financial. So therefore, do watch out for that stock as well. Net viewers, very likely that we'll start off lower and maybe stay lower. Companies like Paytm or some of the others might not do well. Watch out for Bharat Forge, RK Forgings, etc., because Class 8 truck sales have looked solid in the US for the month gone by. Maybe those stocks buck the trend a little bit. If they do, you would know why. And sugar, watch out for that bucking the trend. But by and large, maybe a bit of a pain. Did I miss out showing the SGX Nifty? Can we just maybe briefly show that once more before we wrap up? I don't somehow remember seeing this yet. About 26 odd points start lower than anticipated. Let's see if there is more in store as the day goes by, as European markets open, and if they tumble further after the cuts that they've already seen in Friday's session. Thanks so much for tuning in, viewers. Have a safe day ahead.